Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Friday, the 20th of March. Starting off with Blinkx, where we see a slow recovery from the worst levels of last year, below 25 pence, continuing. Some cause for optimism justified on the basis that we've had this brief bear trap rebound from below the 50-day moving average of 29.5 pence, and also the rebound coming off the floor of a rising October price channel as well. So there could be some further momentum on the upside here. Best scenario probably is that the stock will hit the top of this rising trend channel from the autumn up towards 36, 37 pence over the next 4 to 6 weeks. Cautious on the shares, maybe wait for the 20-day moving average at 31.77 to be broken, and the RSI to get back above neutral 50. It's at 47 at the moment, so maybe wait a little bit longer, but just the hint of a more constructive phase here, especially as the support here looks to have come in towards former January resistance around the 30 pence mark. So slightly more encouraging there at Blinkx. Next up, a stock which I haven't looked at before here on the bulletin board heroes, and it's Galantas Gold. This is progress well underway here after the breakthrough the 200-day moving average last month. That's currently around the 3.78 pence level. We've just had a golden cross buy signal between the 50-day and 200-day moving averages as well, which sort of reflects the near vertical move that we've had over the last couple of weeks. Shares very, very overbought on the RSI scale, 94 out of 100, but looks like it's a momentum story here. And if we are optimistic and look at the configuration going back to the summer, we could have a target here as high as 10 pence over the next month or so, especially while there's no breakback below the 10-day moving average. That's currently at 5.22 pence. Any weakness towards that zone currently regarded as a buying opportunity, and only really back below, let's say, 4.5 pence would really suggest that the shares have delivered a false dawn move to the upside here. On to Sefton Resources, which is a happier story than of late. Disappointing that we had that final dip below 0.1 pence and below the 50-day moving average at 0.1 pence as well. That sort of happened from late February to the beginning of this month. But all of this fits in within a rising trend channel from September last year. And really the view now is that with the bull flag breakout through the 50-day moving average and the end of day close above the 200-day moving average at 0.12 pence, we should at least head back towards the main resistance zone here, which is 0.2 to 0.25 pence over the next month or so. In fact, I could actually have drawn the top of this channel a bit higher up to that zone, because that does sort of fit the area from the September peak to the January peak as well. So the higher volume there, justified there on a technical basis. Trinity Exploration seems to be quite a sort of a hot stock amongst followers and the people I follow on Twitter. Good news here is it looks like we've got positive consolidation either side of the 50-day moving average at 19.93 pence, and a final dip here for the shares yesterday in the form of a key reversal to the upside, bouncing off 18 pence. So we didn't break that low of the end of January towards 17 pence. This could mean that we head back now towards, let's say, the top of a mildly rising trend channel from December at 30 pence over the next few weeks. If you're cautious on the shares, maybe wait for at least a weekly close today above the 50-day moving average, or even a break of this neckline resistance, 24 pence, and the gap up to 25 pence. But looks like we've got the final positive reaction here from for the shares, especially when you add in a rising trend line in the RSI window from December. So possible turnaround there situation for Trinity. Finishing off with a stock I haven't looked at, another stock I haven't looked at before, and that is Zamano PLC. Here we've got situation where there's been a break, breaks above the 200-day moving average and 50-day moving average. So they're running around the 8 pence level at the moment. This looks like sort of a continuation of a basing pattern that we've had since basically the start of last year. top of the channel, possibly September 2013 price channel, with its resistance line projection heading towards 18 pence. And that would be the target over the next 2 to 3 months while we hold the 50-day moving average at 8.16 pence. Obviously, this doesn't look like a very liquid situation, so there could be a bit of a wobble, spikes and probes in the meantime, but possibility of a pattern within this channel developing over the near term. That's it from me. More updates at masterinvestor.co.uk.